So about a day ago, I made a video about why I think the small cap market, the IWM, is undervalued extremely. You can check it out on my YouTube page at Ronnie G Invest. You can see why I thought that. But I want to go deeper. Let's go deeper into my analysis and why I think that. Back in January 16th, this year, I told everyone, and I made a bold statement, that we're in a prelim or a preliminary bull market run. Now, I got thousands and thousands of views. I got over 3,000 views of this. Not a lot of likes. People didn't believe me. Why? There was a lot of propaganda from mega media, Bloomberg, Wall Street Journal, Market Watch. Everyone was saying the opposite of what I was saying. And of course, people didn't adhere to it. But now people are starting to understand why I made that statement. Because I broke down what happened in 2009 with the Russell 2000, and I compared it to the bottom of 2023. The same exact thing. And one of the things that I remember as we were going through this transition, I remember my dad being heavy in real estate. He was stressed out. And I used to pay attention to the news, the media. I was barely in high school. Barely going to high school at this time. And I remember this. I remember the media. I was very aware and conscious of what was going on. Now, was I living it? Not necessarily. I wasn't paying the bills. But did I feel my dad? Yeah. And he was fearful. He would stay up all night praying that a miracle would happen. And he had just bought a home. Perfect time to buy. But did he know that? No. I'm going to explain to you more in deep into why we're in this prelim bull run. See, back in 2009-8, where we had the real estate bubble pop, and you look at the movies like Big Short, and you know what happened now, right? We look back in time, and now we know what happened. A lot of swaps, a lot of people couldn't afford their homes, banks just giving out loans to anybody, being irresponsible. Now, when you look at that next 2 years, oh man, we were running up. When you look at 2009 to 2011, 154% run. So, but guess what happened right after that? Right? Everybody's like, oh man, we're back. We're about to make new highs. Boom, you got a 5-month drop. And people screamed, oh, it's a fake out. This happens. We're just going to keep going down. After that 5 months, or the total of 1.3 years of it going from 2009 and then popping back down, and then what happened next? We went on a bull run for 7 years. 7 years. 7 years. Until we got to the crazy 2020, the pandemic hit. People are taking all the toilet tissue out of the grocery stores. Just wild stuff, right? Wow. So now we're back in the same position. We have another bubble that's popping in today's time. You said it and you thought it. You know the bubble. The tech bubble. The tech bubble. It reminds me of the 1999-2000 tech bubble. Instead, we had a pandemic, and then now we have all these bank runs in crypto. Everything tech-wise just going crazy. And we even have a unstable real estate market again. But we've already experienced that. So what happens, right? What is the familiar thing that you see? See, when you look at the chart, when you look back, when you look at 2020, yes, we started off poor, right? We had a big drop. They had us in the beginning, but later we got back up to new highs. We climbed a little too high, a little too steep, because as grandma says, what goes up must come down. But guess what? What goes down must eventually come back up. So we went up 160%. 160%. Well, roughly, but you get the gist. 609 days. We ran it up. 2020 was just a crazy year. 2021 was a crazy year. And that's when the tech bubble popped. And now all these tech people are laying off thousands and thousands. You have Facebook, you have Apple, you have all these layoffs, right? And so that was the bubble, just like the bubble in 2009, 2008, the real estate, just like the tech bubble, or the dot-com boom. Let me say the dot-com bubble, because we were just getting into the Internet of Things, right? But we also had another run, right? So now, what's the next run? What's going to propel us to have another 7-year decade bull run? AI, quantum computing, VR, AR, the things that we've been trying to do for years and, couldn't quite figure it out. And how can we get this to the public? How can we sell it? How can we put it in commerce? How can we make this a part of our economy? Now we can. We have the chat GPTs of the world, right? And it burst off a lot of babies of AI. AI's been around since the 70s, but now people are starting to see it. You can actually buy it, touch it, feel it, use it. You don't have to be rich, because usually when products are built, you have to be wealthy to experience that product first, because it costs a lot. When you're first building a product or innovating things, it costs a lot. And then over these innovators and these engineers, they learn how to reduce the cost. And then you can create distributions to everybody, and everybody can use it. Kids, adults, teens, the elderly. And now we're there. And so when you look at the current market now, we're in the same position we were in back when we first were making that additional 7-year bull run. Okay? See, we dropped. All right, we thought things were good. We were going to make new highs right here. And guess what? We dropped. So everybody screamed fake out. Everybody screamed, oh, it's just going to be more doom and gloom. Just like now. That's the sentiment of the market now. Until today, Bloomberg released a statement stating that the recession concerns, we're now in a bull market. Now we're in a bull market. Figure that out, right? Because they can't ignore it. The stock market continues to reject the price ranges of 150, 160. The SPY continues to increase. When you look at the S&P, we're on our way back to the top. We're on our way. When you look at the Dow, we're on our way back to making new highs. When you look at Qs, which is tech, we're on our way back to making new highs. We're climbing back up. When you look at small cap, we're climbing back up. Maybe a little slower, just like in my last video. Go check it out. We're climbing back up. And that's good news. Because now this is the perfect opportunity for many retail investors to start buying. Because you can take advantage. A lot of the long-term firms can't. A lot of the 401ks can't. They're still trying to recover. But you can move in and out a lot quicker than these bigger firms with a lot more size and account and cash, you can move a lot quicker than them. A lot quicker. So, with that being said, now you're starting to see the propaganda. Oh man, this is going to be juiced up, ladies and gentlemen. Market Watch, Bloomberg. Obviously, there's risk involved. You'll see that. You'll see people, and you'll see some of these media companies, they're still going to tell you that, hey, like, they're wrong. I'm telling you, if you look at the market yourself, you will see we're right here. We're going to climb back up. We're probably going to have a little dip, and they're going to be like, oh, it's not over again, to try to get a last little propaganda push. Because you know who owns the media companies? The BlackRocks, the JP Morgan, the Goldman Sachs, the Merrill Lynch's, the people that control and manipulate the market all the time. All the time. They control that. But you know what helps them get cheaper prices? Driving down the market. Drive it down, buy cheap, and then we're going to boost it back up. When we have all of our shares, we are loaded up. And ladies and gentlemen, they are loaded up. They are without a doubt loaded up for this next 7-year plus bull run. But are you going to be a part of that? Are you going to take advantage of that? Maybe, or maybe you're still listening to the Matrix. You're still listening to the mass media, the mainstream media. Or maybe you're the next Warren Buffett or Livingston. Maybe you can become a millionaire within the next 3 to 5 years. Just maybe. But we'll see. We will see. But the proof is in the pudding. It's right here, right in front of your face. We were about to climb back up. And then that bull run is going to be glorious. The accounts. Now get ready though, because all the experts are going to come out. All the people was like, man, I did this, I said that, and I made this money, and it's going to be easy to trade. It's going to be so many. It's going to be 20, 30 penny stocks and small cap stocks you can invest in. You can trade and make money, and you're going to see this almost every other day. 50%, 100% runs. I remember because I was in the 2000s. I started 2015. But remember the 2017 run. Oh, everybody was making money 2017, 16. Easy. But it got a lot harder when you got to 2018. So, what are you going to do? Are you going to take advantage? Or are you going to sit on your hands and be scared? Because we all know scared money don't make no money. This is Ronnie G. Y'all make sure y'all like, share, subscribe. Get with me on Twitter as well too. I'm also on here. You can also get with me on YouTube. I'm posting frequently. I want you guys to see this. I used to keep it to myself, but I'm back. Signing out. See y'all next week.